Now turning to confidence among U.S. home builders, which is flying high on optimism that demand for new homes could drive sales growth further. The question, though, is whether optimism will really translate into sales quickly enough. Let's get a frontline perspective now from Glenn Kelman. He's CEO of Redfin, the online real estate brokerage. Glenn, good morning.
Good morning.
I guess we'll start with that question, first of all, which is last week the National Association of Home Builders comes out and says the builder confidence hit an 8-year high despite higher rates, despite what we've seen in higher prices. Are you seeing any slowing in traffic, any denting of confidence?
We did over the past 4 or 5 weeks as interest rates rose, but now, just in the past 10 days, it's increased again. So I think buyers were initially shocked by the interest rate increase. Some of them rushed into deals, but others stepped back, and now they've gotten used to it. Their concern is that rates will only go higher, so I think we're going to continue to see strong demand through the rest of the fall.
And now, what about the communities that have really benefited from the rebound in real estate to this point? I think there are a couple in particular that you've singled out as places that, despite what you were just talking about, are seeing that rebound start to slow.
We are seeing some slowing, especially in places like Phoenix or Las Vegas, where prices have increased very fast. Over the past year, prices have just gone up at an unsustainable rate. So we actually think it's a healthy sign that the market is slowing. So if you look at 10, 20, 30 years of history, home prices never increased 10 to 20% year over year. So what we saw in the spring and the summer was really scary. We don't like to see that year over year because we just don't think it can keep up. So we were glad to see some of that slowing. Probably in March or February, we saw bidding wars in 75, even 80% of the deals that we did. Now that's down to the low 60s. So clearly demand is starting to sag. Inventory is actually coming up, so the market's getting better balance.
Interesting, Glenn. Yeah, those are kind of scary numbers. You know, those don't last forever. How much of activity is being led by buyers with cash, buyers who are, for whatever reason, are not getting a mortgage at all? And how much do you think is being done by real, normal home buyers, so to speak?
Well, actually, real normal home buyers were intimidated the most by the rate increase. So in the spring, we actually saw some of our cash investors stepping back because they didn't want to compete with people who were using the easy money to buy a house at a price that really didn't make sense. And now the cash investors are coming back again. Now that interest rates have increased, they're more competitive because their money really matters more. So the cash investors are probably accounting for 1/3 of the transactions. I would say it's not as much Wall Street money as we saw at the end of 2012, where we saw buyers buying in bulk, and it's more armchair investors who have some cash, sometimes from their retirement accounts, that they're using to buy a property that they believe they can rent out.
Now, Glenn, just a word about Los Angeles here. What's going on and how telling is the transition in the community that you're seeing in Los Angeles for what's happening in the real estate market nationally?
Well, things happen in California first, especially in LA. So for the first time in 2 years, we had 3 or 4 offers going under contract uncontested in the past few weekends. So normally we would see 5, 10, sometimes 20 or 30 competing offers. And over the past month, we really saw that cool down. So some buyers were getting fatigued where they just said, I've had it with these bidding wars. Some of the smart money wasn't willing to compete at the prices that we saw, where prices in some neighborhoods had increased 20 or 25%. So now things have cooled a little bit. The same has happened in Orange County, which was extremely competitive. There was a huge inventory crunch. We are now talking to buyers who are planning to list in September and October. Normally we pack it in for the year, but we expect to see inventory actually start to increase year over year beginning in September, October. So I think even in Southern California, the market is rebalancing, and that's a place that's been absolutely crazy.
And as you say, a place to watch is a gauge for what happens across the rest of the USA. Glenn, thanks very much for your time this morning.